I really like the portal that you have. Really, everything is there. And I found that to be quite handy. I didn't really have a need to look up much, but when I did, it was all right there.
The biggest issue holding people back sometimes is the illiquidity, right, of real estate and the amount needed to get into real estate, the capital.
Yeah. If you think about it, it is arguably the largest and most durable asset base out there is properties, real estate, land. And I called Jason. I think he called you. And then we made an offer literally within a couple hours.
If you have your money seasoned with us for 18 months, somebody died, something happened, divorce, whatever it is, I need the money out. Within the 90-day notice, let us know and you get your money plus your returns up to that point. Beginning to end on this investment, it was a pretty good experience for you overall?
Yeah, it was perfection. Executed perfectly. Everything about it was just hard to imagine a better transaction.
We're here, we're live. I appreciate you coming on and kind of chatting a little bit about some of the investing and stuff you've been doing, even with us and our company, and then some other stuff. But yeah, I guess start off by talking a little bit about your experience with the courtyards and that investment from the beginning. When we came in, we did the full reno on it. You could even talk, because you could talk to this, about how that deal was found, because we saw it kind of pre-off market, from what I understand. That's how Jason had found it, and then I don't know if you were involved in that at all. And then he ran over to the property, and he saw Brandon.
Bit of a story there.
Yeah, but yeah, chat about that, because he saw Brandon, who was a property manager, coming off.
Yeah, that's right. It was funny. I got a call from another broker in town that I had done business with in the past, and he said, "Hey, I got this off-market property. It's really closely held. Families had it forever, just kind of special circumstances. They don't want to list it. Do you think your guys would be interested?" And I said, "Maybe. Let's go see it." And so I went over there and toured it. It was in great condition for a C-class property, and, location was kind of interesting. It was right on the edge of Brookside, but also bordering Troost. And so people get afraid of Troost, but this particular stretch wasn't so bad. Anyway, looked at it. He gave me the price, and I calculated the price per door, and I just thought, man, this is quite a deal. So I called Jason, and you and he had been, investing in properties, and I get him on the phone. And I said, "Here are the major stats. Here's what the price would be. And I think we need to offer it right now, full price, before anybody else sees it." I asked him if we gave him an offer immediately, would he take it to the seller and negotiate, or was he going to hold it? And he said he would take it. So, and then on my way out, our favorite property manager was passing by, and, he looked at it. So it was just he and I that saw it. And I called Jason. I think he called you. And then, we made an offer literally within a couple hours. And
because I didn't even need I didn't need to look at the stats too hard. I mean, I looked at it from top of napkin, but as you'd said, sometimes you get lucky, and this was one of those times, and you're able to hit a home run. I mean, a lot of times you may hit a double, and that's great. If you can hit a lot of doubles, you're doing well. And then occasionally you get a home run. And this was a home run.
Yeah.
And I thought it was funny that Brandon, the property manager with North Terrace, was coming off it as we were walking on it. And I remember it vividly, because Jason, or you or Jason, called up and you're like, "Listen, there's no point in fighting over this thing. I mean, we're the only two people that know about it."
That's right. So it's like, let's just go get it together. That's right.
Yeah, we're the only two people that know about this thing right now. So let's not fight over it and jack up price. Plenty of skin in the game for everybody.
Right. Yeah.
And let's go buy it together, and we're going to raise money anyways for it. So let's raise it together.
Right.
And meanwhile, we have a property manager that's already in place, make it super easy on a transition, and someone who's vested in it as well. And so that's how that deal went down. It was a 30 unit. We turned into 31, and great.
They had an on-site manager taking one of the units.
Yeah. And correct. And now we could free up.
Yeah.
And, we could go in, reno it, turn it. And we saw where the rents were currently at. And like you said, it was a good quality property that just wasn't run like a business.
Right.
And because of that,
just a family project, really.
Right. Rents were super low, and they had older tenants there that, we had to be tactful on how that would maneuver through, but that worked well. And we were able to refi that thing, reno it and refi it in 24, 28 months, get everybody their money back. We did 120%, cash out refi, and returned everybody's money plus a little pref on top of that. And then, continued to own it. And do distributions and stuff. And then we were fortunate that I'm not even allowed to say their name, I guess, so there's an NDA involved, but the Diamond family next door decided they wanted to expand their academy for the kids and stuff,
Yeah.
and made us an off-market offer. And it, we'd been talking to them for a better part of a year, and they were able to offer a good solid price and premium, not premium, but price for the property that we couldn't resist. And we said, hey, it's time. We've exhausted the depreciation on it, had it for 6+ years, a chance to get everybody their remaining capital out and profits and everything, and let's move on to the next one.
Yeah.
And so then we tactfully waited until January of this year, because I always tell people, you never want to sell a property at the end of the year. That's dumb, because you don't have enough time to handle the capital gains issue.
Yeah, January is perfect.
Right. So we close in the first quarter of every year, because we knew we were going to have a taxable event. And then now all the investors get their money and their profits, but we give them a heads up and say, hey, you have all year, let's figure out what your taxable event is, but you have all year to go, put this in something else and avoid taxes, and, away you go. And you can just, move off into the sunset and do some other great things. But that's why we close in January, to give people the runway, because you can't 1031 exchange, out of it.
Right.
So
that's smart.
Overall, how was your experience, I guess, in working with the GPs and investing in the deal and all that?
So, I really like the portal that you have. Really, everything is there. And I found that to be quite handy. So, I didn't really have a need to look up much, but when I did, it was all right there. And, you had discussed a plan on how to reposition it, and, you pretty much executed flawlessly on that. Moving them from a C to a B was a little bit challenging with some of the units. You had to be a little creative on how you got washer and dryers in there and so forth. But I thought, you guys figured out a way to do that in a good way. And, it's interesting because their basement is like really quite awesome. And they had, laundry in the basement, but they have cages, and they're really done well down there. And so I thought, with the washer dryer in the units and the finishes you were putting in there, and the basement storage that each of the units has, makes it a really solid B product. And so, you turn that around and did a great job with that.
Yeah. And I didn't know at the time, but how is it Brookhaven? Is that right? Or where's the neighborhood?
Academy?
Yeah. The neighborhood. Was it Brookside?
Brookside. Brookside is one of the most coveted neighborhoods in the whole city.
Yeah. And I didn't know that at first, and how we're on the border of it. It's kind of like the trendy, vibey area of Kansas City, but it ended up being a huge plus. And, gated little 31 unit property,
secured,
right next to
a
Washing Academy. And it's kind of like everything came together the right way for this deal. That's why I always tell people, listen, they're not always home runs.
Yeah.
This one was a home run. A lot of times you get a double, and you're super happy with that. But yeah,
and the Academy is
an aspect.
Yeah, the Academy is a beautiful little campus they have there. So, that was kind of a side benefit because it was kept up very well. And, it's kind of an exclusive school right there.
Well, yeah. And then even across the street, we didn't know it at the time, but they were going to build that whole medical center.
Yeah. And then they put the medical buildings across the street. Yeah. So,
I mean, when that was going up, I was like, oh my gosh, cha-ching. I said, you couldn't have planned this thing any better, right? If you tried. Yeah. So we just, we happened to hit it just the right way.
You sure did.
What are your plans moving forward with Kansas City, with work? I mean, where are you at career-wise?
So we, my wife and I work together. She's been in the business for 25 years. Her side of that really isn't changing. I have investments. We have investments, I should say, in really short-term and a mixed-use property that's really pretty cool. And we're just, in that way, we're kind of weathering the storm, because it's been rough for short-term rental in Kansas City.
Yeah. That's changed a lot over the last few years, right?
Yeah. And I've got a technology company, and that's where I spend most of my time, all in on
and so
AI
that's
stuff.
A software-based. That's a software-based platform. What is that again?
Yeah. So what we've just launched is a AI-based compliance system for real estate brokers. So, kind of using the power of AI to scan documents, find errors, provide, appropriate feedback to the agents so they can get their documents straight and compliant.
Got it.
And it's an interesting area because, the tools that are out there to help compliance managers and officers, it still requires a manual review of each single page, so
Sure.
our system is you just load it up and it scans it and then produces the report and you're done. So
Yeah, and you can see that happening. I'm even seeing it with legal documents, even with the PPM docs for securities and running these syndications. It's coming fast, and they have it out now where you can go and do full document reviews of your PPMs. But the key component to it, as I'm sure it is with real estate, because of the liability side of it, you still want a human to sign off on it. And because mainly because hey, if anything happens, they want somebody to talk to that is not a robot and somebody to lean on, especially in the syndication world where, yeah, you can go get a template, you can go have AI do some things, and that's all great. But if something goes wrong and a deal goes south, the first thing that's going to happen is an investor, that maybe have a good amount of glue in the deal is going to call their attorney, and that attorney is going to call your attorney. And if you don't have an attorney and they happen to call you and they ask you how you did your documents, and if you tell them, I got it through a template on AI, they're going to say, would you like to put the handcuffs on now or would you like to put them on later?
And that's the problem that we've solved with our software because, AI does hallucinate and it mutates. And what we've done is we've invented some technology that makes the results deterministic, fully documented on every single field. And the documentation that we have with our system is far better than anybody has in a manual-based process. And of course, it's consistent. It just does the same thing every time, never gets sick, never goes on vacation, actually works 24/7 and is 10 times faster than doing it manually. So it's kind of a win-win, but you're right. If you just kind of presume that this machine is generally going to take a general instruction and come up with a good result, that's a bad formula. It doesn't work.
Agreed. Yeah, it'll be interesting to see what happens. I know a lot of people are worried in a way, just how many jobs are going to be lost, how many will overlay, what that's going to look like a few years from now, because it's coming at full throttle.
Yeah.
And it's coming for different levels of jobs. I mean, I would even argue it's probably coming for the middle grade white collar jobs more than, say, it's not coming after a plumber, right? Or,
no.
Or an electrician or HVAC or any of the, your blue collar workers. It's coming after the administerial white collar style jobs that can be replaced with a robot, an AI.
Yeah. And it's, I think it's kind of overblown is my personal opinion as someone who's like gone deep into this technology for a while. It's just a really good tool. Okay. Is what it comes down to. Our solution does not replace compliance managers, but it does make them more effective and more efficient. So it's like improving it's making that AA player a major leaguer is really what it comes down to.
Yeah, I mean, it's adding another set of eyes on it in a way, right? In a way.
Yeah. Well, if you think about the scope of most things in life and, real estate contracts and documents also, there's 80% of the stuff that needs to be checked. It's pretty easy to check. And then there's some nuances, and you still need that human to deal with the nuances for sure.
Sure. So overall, kind of, beginning to end on this investment, it was a pretty good experience for you overall.
It was perfection. It was like executed perfectly. Everything about it was just hard to imagine a better transaction.
Yeah. And I wish they were all this wonderful. I mean, for the most part, and thankfully we haven't had any, bad ones. We haven't lost anybody's money or our money yet. Knock on wood. We've had some ones that we're in the fight on currently, but they're still trugging along.
Yeah.
And we're in the midst of fundraising and doing ours on our fund and stuff. We actually, I don't even know if you know this, but you do deal by deal for a while because until you have a track record, that's what investors invest on is a specific deal. And then they realize, okay, you can execute the strategy. So maybe if you did a pooled fund, focused on a certain strategy, then we could invest in that and then diversify our money and risk amongst multiple properties. And so, yeah, we started our fund. It's a $25 million fund. But what we did unique to this, and this is what's coming down the pike, and this is super cool, and I'll share this with you and we can finish off on this. So I went out to investors third and fourth quarter of this last year, and I said, hey, this is what we're doing. And I know a lot of people have a lot of dry powder sitting around that maybe they're not putting into the market because they're concerned or this or that, or it's stretched or whatever it is they're doing, but they have it there that they would like to. What would get you over the edge? Like, what would put you to feel comfortable? And there's a couple things that came up. Number one was, if we're going to go into a fund, or even a syndication, I want some liquidity to that. I don't want to be tied up for 5 years. Right. That was number one. Number two was, if I was going to go into a fund, I want some customization to that, meaning I get to choose, right? Because a lot of times you go into a fund, it's a pool, it's a blind pool. You don't know where it goes, but it's there and you just get your returns. What we did with this one is we said, no, you're going to have full visibility on it and you can choose which property you go into should you want to go into one more than the other.
Interesting.
So that's a customizable fund, right? So if we have 3 properties in there, you can choose A, B, or C, or just, hey, put it amongst all of them. You get to choose that, so it's customizable. And then number 3 was higher velocity of returns, right? And in traditional multifamily, you get your, let's say your 6 to 7, maybe 8% preferred return, and then a certain percentage of the ownership. Overall, it's 15 to 18% a year on your money on average. Which is good. And then you get tax write-offs and all the other benefits, right? Good returns. But they wanted a little more higher, faster velocity of money. So what we did is we said, okay, what if we combined our flip model that we have, and we also do ADUs, accessory dwelling unit, mini developments. And there's certain markets this works in. San Diego is one of them. It's beautiful for it. And the laws and stuff are really great for it. So we can go in and in 4, 6, 8, 10 months, move money faster. Those profit margins are higher, and we can move that into the fund and then also have the multifamily. So we said, okay, for every $100 that comes into the fund, we're going to put 25% of it into the flip ADU model, 75% into the multifamily. So that way you still are protected, right? You still have a pretty 75% of the money's in consistent, conservative multifamily investing strategy, and then only 25% goes into this flip and ADU model to boost the speed of the money. So that way now we can offer 9 to 12% preferred returns, and then 18 to 24%, annual returns on the money, because we're able to turn that money faster. Right?
Yeah, that's really interesting.
Yeah, and so then on the liquidity of it, what we did is we said, okay, we're going to offer redemption rights, which means if you have your money seasoned with us for 18 months, you give us 90 days notice for whatever reason. Typically, it would be a life event, right? That's why somebody would want their money out. Somebody died, something happened, divorce, whatever it is, I need the money out. Within the 90-day notice, let us know, and you get your money plus your returns up to that point. And that way you get liquidity, and you don't have to be tied up 5 years, 2 years, anything if you don't want to. So that way you have speed of money, liquidity of money, and customization to choose where the money may go inside the fund. And that's resonated a lot with people because it's just unique. You haven't really seen a lot of that.
What? Yeah, I've never heard of such a thing.
And then to add fruit to that,
creative.
Yeah, to add fruit to that, what's coming down the pike, and I don't even know if you know of this yet. Obviously, everybody knows crypto, right? At this point. But what's happening now is the tokenization of real estate. So outside the United States, you go to Dubai, Europe, many other places around the world, they are tokenizing the real estate. So no different than you buying one Bitcoin. You would, if I was going to go syndicate a deal, rather than having a minimum investment be 25 grand and then you buy a share. Now I actually create a coin specific to the property. That coin could be 10 cents, right? Whatever.
Be fractional.
Now,
right?
and it's on an exchange. Yep, it's right on an exchange. You go buy it. It's held in a wallet, just like normal crypto would be, no different. And then now, because of the blockchain in the smart contracts, now that coin, its ownership, no different than go buying a share like you normally would in an apartment deal, but it's done through the coin, in the ownership through the coin, and now you can tokenize the real estate, but more importantly, fractionalize it, because now I can buy $100 worth of the apartment building.
Right.
And more importantly, it's very highly liquid, because if I buy it today and 3 weeks from now I want to sell it, I would just sell it on the exchange for the value of that time. Right. And then now it goes global. So now it's no longer about raising money within the United States. Now this thing goes global, and now you can tokenize and sell all over the world. And because of the smart contract and the blockchain, it's very easily traceable. So you don't have to worry about the accounting or, who has what or who has what percentage of what or any of that kind of very detailed information, because it's right there on the blockchain. If there's 1/10 of 1% owned by Timbuktu in Taiwan, right? And so it's very easy to trace and manage it. So we're doing that. So there's a company called DigiShares and RedSwan.io that are doing this right now. And they're doing it all over the world. Now it's just coming heavy into the United States. The only reason it hasn't really taken off yet here in the States is because of the SEC. And there's just more regulation on it to where they're being very tactful to avoid unknowns, I guess you'd call it. But yeah, I mean, imagine that for a minute, when you can take any kid that's 18 or whatever and wants to put in $200 in to syndicating apartments. He can go buy our he can buy our Courtyards coin for the apartment complex.
Right. Yeah.
For $5 a share, hypothetically for a minute, and he buys 20 shares of it, has $100 or whatever, and now he has it, and he can trade it tomorrow if he wants. I mean, and then it just moves.
It's an interesting model.
Yeah. Isn't it crazy?
Do you have any idea when it will be coming to the U.S.?
It's already here. It's happening.
It is. Yeah. Okay.
Yeah. You can go to DigiShares. I have a meeting with them tomorrow, by the way, too. So DigiShares.com and or RedSwan.io. And I met Red Swan, 3 years ago at the National Multifamily Housing Conference. And they were just getting started on it. And I met with them, their CEO, and I'm like, okay, I could see this. And it went around the world first because the world was more open to it. But the US was constrained on it. But now it's finally happening because of the administration. And then they have crypto czar and all the other things going on. Now they're moving full throttle at it. So we're moving full throttle at it because, I mean, imagine raising capital in this fashion where I don't need to be constrained to my network anymore. Right now, I can go global with it, and the barrier to entry is minimal because now I can go buy a share of an apartment building for $50.
Right. Yeah.
Right. And it's very easy.
Well, if you think about it, it is, arguably the largest and most durable asset base out there is properties, real estate, land. So
yeah, and they're just gonna, they're tokenizing them.
Have an exchange that's backed by something. I mean. Look, you can melt down gold and I guess make a ring out of it, but it's just not that functional beyond that.
Right.
Whereas land and property is really bad.
Right. And so what they, the biggest issue holding people back sometimes is the illiquidity, right, of real estate and the amount needed to get into real estate, the capital.
Yeah. Right.
And so now if you can make it liquid, almost like a stock in a way, and the barrier to entry is minimal, you can go at it. And then the only thing they'll have to figure out, which they're doing now, is doing a net present value. So usually what they'll probably do is they'll do a net present value calculation once a month on the asset, and that will establish the value of the coin.
Yeah.
The value of the asset at that time.
Yep.
But they can work through that in real time. So, but yeah, man, that's what's going on. Okay. Well, yeah, I didn't want to take too much of your time. Just wanted to hop on and kind of getting everybody's feelings about, investing and all of that. So I'm glad this was fun and we got through it. And
nice job on this one.
Yeah. And we're still looking for deals. We're buying. I mean, we see the opportunities out there, and the rates are starting to improve, in this space. So I think it's it's definitely pencils up for sure.
Yeah, absolutely. All right.
Awesome, man. Well, stay warm.
Yeah. Thanks.
Stay warm in the 6 degrees out there, and have a good weekend. And I know you're not going to love me saying this, but go Patriots.
Ouch. Yeah. Well, it's been a while for you guys, and
it has. It's been 7 years. It's been 7 years.
We've had a good run.
And listen, you guys.
I think we'll be back very soon.
You guys will be back.
Yeah.
KC ain't going nowhere. You guys are right there. So just a little hiatus for a year.
Yeah. Catch our breath.
Awesome, man. Well, yeah. Have a great weekend. I appreciate you taking
to talk to you.